Hello, Jason here. Today is December 5th, and this is your aftermarket update for the trading week beginning November 30th, 2015. All right, so it's been another good week here at the Oil Trading Group. In fact, we've had a really nice 2 trading weeks. We are on a 9-day winning streak right now, and the market has been somewhat sluggish and choppy as we were heading into the OPEC meetings. We're going to talk more about that in just a few moments, but let's talk a little bit about where we are over the past couple of weeks. As many of you know, we have been selected as the lead oil educator for the folks over at Top Step Trader, and we are trading Top Step Trader combines live in the room for you. So again, this is a unique way for us to be able to measure our performance, but also to be able to show you how you can successfully navigate the waters of a trading combine to get yourself a fully funded trading account. So let's talk a little bit about the performance here metrics. This is also going to be in the blog post this video will be attached to. If you look up here in the top, there's days traded is 9, and you'll look down here at the November 19th start date. So we started this combine on November 19th. That was a week before Thanksgiving. Then we traded just about every day going into that week of Thanksgiving. We had a couple of days off at Thanksgiving, and if you look right here, between the gap between this was the Wednesday before Thanksgiving, and this was the Tuesday after Thanksgiving. November 30th was the first day of this week. We did not have a trade on that day. We sat and watched the market. It just did not provide a trade for us on that particular day. And that really has been a theme here over the past couple of weeks. I'm going to show you again here on a chart exactly what it is that I'm talking about. But you can see that we are up $2,740 in these 9 trading days. Our average winning day is 304. We haven't had a losing day yet. It's coming, but it hasn't happened yet. And we are riding a nice little winning streak. Of course, you know, we're never going to go 100%, so there will be a losing trade or losing day at some point. But right now we are on a nice little run here at the moment. All right, let's move this out of the way and let's talk about the weeks, the 4 weeks of November here, and then the 3 previous weeks that we've had to deal with. This is a weekly chart, and I have a 9 and an 18 period EMA. And basically, since I put these EMAs because they move quicker, this is on a weekly chart, and it gives me an idea at a glance here how the market is, if it is trending or not trending. And you can see here back into the first week of November here, the market these EMAs began to combine, right? And so with these EMAs combining, that's a pretty good sign that we are in some choppy conditions. This is the week of November 9th. This is the 3 weeks leading into this week here. This is this week of Thanksgiving, and the week before that. So you can see that the moving averages have combined together, and we have had a small little 3-week period here. It's going to be even more evident here when you begin to look back. This is that long, this was this really volatile week. In fact, maybe a little bit difficult here for you to see, but we had the range on this week was 490 ticks versus an average for the period prior, and the period prior would be the rolling months prior to this. It was 110% this particular week over the averages. You begin to look at the 2 weeks leading into the final week of the OPEC meeting. You can see we had a nice, tight, condensed range here, 219 ticks. It was only 45% of the total range for the previous periods. Same thing here. This was 63%. This is the week of Thanksgiving. And you can see just how tight and narrow the ranges are. And then even this week with the announcement, it was only 62% of the previous ranges. The point of all that is that you can see how tight these ranges are. Tight trading ranges lead for very choppy conditions, make it difficult to trade. So the fact that we've been able to navigate this area with a very narrow trading range and not having any losing days during this time period has been, we feel like, is quite a decent accomplishment. So that's where we are from the big picture perspective here on the weekly chart. Again, tight, narrow ranges. Let's take a look here as we recap the week, let's take a look at some of the high points here. Here's a daily chart. So this is a 50, 100, and 200 period SMA. You can see that from a daily perspective, all of these moving averages are sloped to the downside. We have had some rallies into the 100 period SMA, but again, most of these are sloped to the downside. So as you begin to work your way down into time frames, you can start to see that the bigger picture still here, at least on the daily chart, is to the downside with a few rallies trying to take out some structure points before it. But again, we have been ended the week moving to the downside. One of the things that I like to do here is I like to draw swing points. This chart's going to be much cleaner than a chart that I'll show you in just a few minutes. But the real key number here is back on August 24th, we hit a low here of 39.97. And you could see over the past 3 or 4 days how many times we have challenged that level and tried to get underneath it, and we were unable to. So again, as we were catching, we had a nice trading day today. On Friday. You can see here we had net 759, about 76 ticks on a 2-lot here on December 4th. And we came right down into this zone again here out of that announcement. We had OPEC announced that they would be increasing production limits and not decreasing those. And that, of course, sent the market into a fairly significant dive. In fact, let's take a look here. In fact, that's this 15-minute bar just prior to the open, right? We came down into one of our support and resistance zones here at around the 40.18 level. And then, of course, we came down into this support and resistance zone, and it held down here at the 39.75 to 81 area. So, again, this was right before the open. We caught a piece of this move, and then really we went sideways for the better part of the day. In fact, we talked about that in the trading room on Friday, that we had finished up. I was gross 80 ticks. When you back out commission, it ended up being about 76 ticks. So we talked about just sitting on the sidelines, and that's what we did for the balance of that day. But continuing to go back and review the week here, one of the things here, again, this is that sloppier chart that I said. What I do here on this 60-minute chart is I just try to plot out swing points, right? Areas on the chart where it's areas where the market has turned previously, right? So highs and lows. This would be, you could consider this a fractal chart. Now I've missed a couple because these were recent swing highs and lows, and I'll go back and clean up this chart. But you can see here just how many times we've swung recently this is 40.10. In fact, the market closed out on the day at 40.14, as you can see. So 40.10, then right below that at 40.07, and of course this is the 39.84 spike down into it. And if we went back further, we would see that 39.97 level would also be important. But again, this just helps me determine where it is that I can expect previous swing highs and lows to affect the market. So that by itself doesn't mean a lot, but in conjunction with other studies, it becomes something that's relevant. All right, so let's take a look here. One thing I want to show you here, we do this a lot in the room, and we talk about this a lot in the room, but this chart is a 15-minute chart broken down by days of the week. The black dotted lines represent the transition from Friday to Monday, so the beginning of the week, and then each one of these red dotted lines represent a day of the week. One of the things that's very important here to note is that typically on a Monday or Tuesday is where you will see the high or low of the week. So as you're trading crude, one of the ideas that it is prudent as you go into Monday, Tuesday, Wednesday to remember is the high or low of the week, the tone will be set for that week based on that Monday or Tuesday trade. So knowing that, right, you want to be sure that you are being cautious on those days because, again, there can be some volatility, but, again, it's the market trying to determine where it's going to establish itself in terms of direction. So, again, this is the Friday before. This is Monday. The high of this week was made here again on Monday. The previous week you had a low. Now, this is a week of Thanksgiving, so it's a little off, but the low of the week was made on Monday. Also, you had a high of the week on Tuesday, too, as well, right? So you had the low of the week, though, on what was an overall up week was made here on this Monday. You come back a little bit. This is Monday, and this is Monday here. So the high of this week, you had a low and a high made for the entire week on this day. So this is what I was telling you about earlier when we talked about just a little bit of a consolidation period as we went into the weeks here, right before Thanksgiving. So you had just really all of the price action was choppy and condensed in that zone. And that, again, that does make for some choppy trading conditions and some difficult trading conditions. But regardless, the high and the low of this week were actually made inside that Monday. So one more time, coming back here, the high of this week was made on a Monday. This week, the high was made on a Tuesday. So like I said, Monday or Tuesday is where the days get set. Most recently, it's been mostly on Mondays. So if you come back and you study, let's go back here we'll go back to this chart. I want to show you one of the ideas that occurred this week. And again, this idea occurred and was we had the only OTG trade of the week that we had was on Tuesday the 2nd, and it was a result of this play right here. So you have several red lines here marking the swing points, right? I left this one out, and I don't have one up here. But after, right, we have a few of these red lines marking swing points. Then this blue line really marks a triangle or a series of bottoms here. Bottom, bottom. We tested, came back up through it. And so you have, if you drew a trend line, which I did from here, you could start to see how we connected these spikes up into it. This spike right here was Iran now announcing that they have all agreed on cuts, which actually didn't occur. And this was a spike into it the previous week. And so when you measure this high down to this low, you get 111 ticks. If you measure the break of this formation down to the bottom here, you have 111 ticks, and that's 40.39. And so this was what we did on the week of December 2nd. Sorry, on the day of December 2nd. This was Tuesday. We didn't have a trading day on Monday. We ended up having a trading day on Tuesday. This spike right up into this trend line, and then we rolled right on out of it and down to our target. In fact, we got a little bit deeper. So go back and look at the Trade of the Day video for the day of December 2nd, and this was one of our big moves of the week. Now, we had a really nice move on that day, but as you'll notice, as you'll go back, if you read the post and you look at the video, you'll see that we'd gotten beat up a little bit going into that. So while we did have the full move that we took, it was 111 ticks. We didn't finish up that high on the day, but go back and look at that day. And it is under the Trade of the Day videos, and I'll put a link here in the blog post as well. All right, so again, basically, to sum this up here, we had a fairly narrow week in terms of range this week. In fact, if you go back and look, this was 301 ticks versus an average for the period of 487 for the week. This week here, the first week of November, was much more in line, and then you had a couple of small weeks as we were leading into the Thanksgiving holiday and the OPEC meetings here. So again, we have been very cautious about the way that we've handled our entries and conservative about the way that we've handled our exit, particularly when we have been going against the underlying trend, which has been bearish. We have been very aggressive on profit taking on the longs, and in most cases on the shorts, we've been fairly aggressive as well, with the exception of December 2nd, which, again, I encourage you to go back and look at that blog post for that time period. So to put a bow on this, we've had 2 weeks in the combine. We're average winning 300, about a little over 30 ticks a day. On a 2-lot, we're up about $2,700, almost $2,800 in that particular combine. We have a long way to go to get successfully through that combine, but if we continue to stay the course and have this conservative approach to the market, we should be in decent shape. So having said all of that, I want to say, again, as always, I want to say thank you for spending time watching the videos here at the Oil Trading Group. And until tomorrow, or in this case, Monday, I want to wish you good luck and good trading.